Hey guys, this is Coach Kelvin with DTC Coaching. Today's group coaching session title will be Why Trading Rules. Thank you guys for joining us today. Hopefully you get some good information. I ask that you get a pencil and paper and take some copious notes because I think today is going to be very rewarding to you. And this is Coach Kelvin. Let's get started. Hey guys, listen, I'm excited today because today the market moved over 200 points. I mean, like, just flushed. And everybody that did the right thing, that had the trading rules in place, they probably took money out the market. Now, if you don't know, your only job as a trader is to take gains out of the market. So today's topic is going to be straightforward. Down the group coaching, it is why trading rules. Trading rules are there, guys, to protect you. Trading rules are there to keep you honest. Trading rules are there to make sure that when you make gains out of the market, you will keep the gains in your portfolio. Your job, your only job, is to take money out the market. No, well, you have two jobs. Your second job is to manage risk. That means that you have to know when the trade is not working in your favor. You have to know when to pull the plug, to pull out of the trade. You have to know these things. And if you don't know, the market's job is to take gain from you, to take the profit that they gave you back. And you are never, and I say never supposed to, let me show myself here, never supposed to give the market back the gain that it gave you. Your job is to take money, not to give money. Now, we know that with any trading process, you must have risk. Because if there's no risk, there's no gain. So you got to take money to make money. So you have to be willing to get in the market, risk some capital, and to see if the market is going to work out in your favor. Is it going to be profitable to you? So what I want to say to you is this here, is that if you have trading rules in place, then you have some type of structure in place. Because the thing is about this here is this game of trading is the only thing that I've ever been in, and there's absolutely, and I will say absolutely, no rules. No rules. So that means that you can come in and you can play as long as you have money. But you know, and I know, if you're a novice trader, you've been trading for a while, with no rules, you're a train wreck waiting to happen. So what I want to do today is speak to the point about why rules are so important. We've been covering this series, acting in your own best interest. Okay? So acting in your own best interest means the fact that your job is to protect your portfolio. So when you stop the losses, you're acting in your own best interest. When you set profit targets and you take money out of the market, you're acting in your own best interest. When you restrain yourself from trading in markets that's not producing opportunities to make wealth, you are acting in your own best interest. When you decide I'm not going to trade in certain periods of the day, you're acting in your own best interest. Whenever you put restraints on yourself, whenever you put conditions on yourself, you're acting in your own best interest. We call them rules. Whether they're written down or they're in your mind, they are rules. The dangerous part is that a lot of traders, novice traders, retail traders, because if you may not know this, but 90% of retail traders are losing money. There's a reason for that. They will get to the market, they will have rules subconsciously built into their mind that's brought forward to their conscious mind, and the rules change day by day. Yeah, the rules change, all depends on what's going on in the market, meaning that they'll make their rules subject to their desire or their passions or their emotions to take or not take a trade, to stay in the trade longer than they should, and they're making them up as they go along. That is a rule. That rule is dangerous because you will end up losing money. But most successful traders, consistent successful traders, have rules that's written down and they follow them daily. Meaning that I have rules, okay? And I call myself a scalper, and I'm trying to break the habit, but it's a good habit because I make money scalping. I'll get in, I'll take 10, 20 points out the market, but everybody is not built the same way, nor have the time or the talent to do the scalping. So what you should do as a retail trader is have some rules in place that's consistent with your lifestyle, with your trading style, with your personality. And that will help you better. It will help me because your rules may not be conducive to mine. My rules may not be conducive to yours, but there's a general framework of rules that I believe that we can put together in any trading platform, any market, and they'll fit people across the board. Okay, we're going to talk about that. So one of the things I want to just on a recap here, I want to go over the fact that we started off first, and this is all mindset, guys. You have to basically set some goals, right? Goals will give you a rule. Goals will put you into the place where you will have a measured mark of where you want to go, where you won't go, where you will and will not do certain things. So your goals will give you they will give you a point in the future that where somewhere you want to be. So when you get that goal in place, that where you want to be, then that goal gives you a steering mechanism where you're trying to go. But then you have to say, how am I going to get there? Now you have to set up a plan, some research and development, some R&D to put together a formula to put together your operational manual for your business, because your trading is a business if you treat it like one. If you treat it like a hobby, you're subject to have a catastrophic losses. You're subject to blow accounts. You're subject to be in a place where you're one of the 90%ers. You're not the 5%, the 10%ers that's making money in the trading business. So your goals say that to get to this goal, you have to know how I'm going to get there. Now you start to figure out what you're going to do. And the first thing you're going to do is with the goal, you're going to come up with a plan. Because this said that a goal without a plan is just a dream. So you have to have a plan. So what is your plan? Your plan is that I want to trade when? This is your beginning of your rules. I'm going to set some goals that's realistic. First of all, I'm going to come up with a plan, and I'm going to set measured marks for my plan. That means that the first thing you're going to do to be able to measure your success or failure is you're going to have to know what your benchmarks are for that day. So are you journaling? That's the first set of your rules. Rule number one, I must journal all my trades. That's rule number one. You say, well, coach, I can't journal all my trades. I trade so much, it's too many. Well, you over trading. Therefore, your plan is subject not to work, because if you don't measure where you've been, you darn sure won't know where you're going. Because your success or your failures will not be measured. So therefore, subconsciously, hear this out, subconsciously, you don't like pain. Subconsciously, you don't like to tell yourself you're a failure. Subconsciously, you don't like to beat yourself up. So what you will do, you will refrain from your bad habits and your bad mistakes, and you will continue to produce them over and over again, and you will cover them up with some lie you telling yourself about why this did not work. It was the market's fault. They called the wrong play out in the Discord. The market don't like me. Whatever that may be in your mind, you're going to do something to protect yourself from pain. Nobody likes failure. Nobody likes pain. So therefore, you as a trader are responsible to have things in place, rules, measurements of your trading to help prevent the pain so you can stay in a place of pleasure. We love pleasure because things that feel good, taste good, smell good, that's the seat of our emotions, right? We want to gravitate to them things and stay away from everything else that gives us pain. But some of us are dealing with some unbearable pain right now in our trading business, and we don't know how to get out of it. Some of us really have not gravitated to the point about being successful takes discipline. Some of us don't have this image in our self-image, in our subconscious mind, that we are successful as a trader. Some of us don't really know that money is not the root of all evil. Some of us don't know or haven't accepted the fact that you don't have to work hard to earn income. So I want you to really hear this, what I'm saying to you. Because if you're in the market and you're making $2,000 today, and then you give the $2,000 back today, and now you're down $500, what happened? You have to really know what happened. Why did you do such a thing? One of the things I was asking a student of mine this week, I said, if you worked all week long and you got your paycheck, and somebody walk up to you and say, hey, give me your paycheck, would you give it to them? Would you give it to them? You know the answer was overwhelmingly, no, I would not give it to them. Why wouldn't you give it to them? Because I worked hard for this money. Okay, there's a premise. I worked hard for the money. Now this has a lot to do with your goals now. Hard for the money. So would you feel that you worked hard for, you feel strongly that you would not release easily? Because you have a strong passion, a strong control mechanism in that hard work equals gain, that I will not give up easily unless I have to for benefit of me in the future. When you come to your trading, you push the button, you're 5 minutes, you're up $2,000, more money than you made for the last 2 weeks. But it's so easy when the market says, give it back to me, or your greed says, get some more, or not being disciplined to your rules. Guess what you do? You push the button, you get back in the market, and you give it back to them. Why is that so easy? I think, one, is that you have a mental conflict going on in your subconscious mind. I think that you have not accepted the fact that you can make money easily and be okay with it. You have not accepted the fact that it's okay to take gains out of the market that's not in line with your previous thinking that you've grown up with. We spoke about this last week. This framework of hard work and money has been pumped into you by the school systems. It's been pumped into you by your parents, people that nurtured you around you, because they tell you all the time since a kid, if you work hard, you're going to be good. You're going to do good. You work hard, you're going to be able to buy a house. You work hard, you're going to have savings. You work hard. See, work hard is the premise of everything that you know about making money. Hear this out real good. Working hard is the premise of everything you know about making money. So what you do is this here. You work hard to, make sure you guys muted, to keep your money, and so success is tied to work. Not just work, but hard work. I'm gonna redefine success, which is in trading. I need you to mute yourself. Whoever that is open mic. Okay. I took care of it. Success is tied to this. Success is tied to you making intelligible, conscious decisions in trading to get in and out of a trade, guided and framed by a group of disciplines. It doesn't require hard work. It doesn't require super intelligence. It does require some insight. And one of the titles I give ourselves is where our job is to take gains out of the market, to manage risk, right? And follow our rules. Them three things there, if you hone in and make them things a reality, guess what happens? You will be a successful trader. You will be a successful trader. Now, you have the responsibility, no one else, you have the responsibility to do just that. Now, can you do it? Let me give you some framework. I'm going to go back and give you a few things right here. Make your goals, make them realistic, make them attainable, okay? Make sure they're measurable. How are you going to do that? You're going to journal your trades. What worked and what did not work? What is your edge? And we're going to talk about it in the second half about the signals and so forth, which you already know. But what are they measurable? And if you're not measuring, there will be no chance you're going to be successful in your trading. It just won't happen, guys. So what I want you to do is make sure that you stay in line with the goals and the boundaries you set up. I want to make sure that you will change the self-image of yourself. Some of us have a goal to be a millionaire. Some of us have a goal to be able to retire in 6 months. I want you to start to picture your retirement. I want you to go and make up. You ever heard this here? It's called a vision board. When you retire or you become that millionaire, what does it look like? What does it feel like? This is all got to do with your rules now. I want you to take and get a blank piece of paper, a blank board, and go in and find the lifestyle that you want to have because you're trading. I want you to cut the pictures out and put them on your board. I want you to set your goals and put them on the center of your board. I want you to set your income goals, your rules on your board. And I want you to put the pictures of you traveling to the distant places around the world, wherever that may be, your dream vacation with your family, wherever that may be. Maybe you want to be a philanthropist. Maybe you want to build orphanages and feed the hungry. And maybe you want to clothe the naked. Maybe you want to take care of widows. Whatever that may be for you, what is that thing that drives you to get up in the morning? What is that thing that God has put in your heart to turn this passion on for you to even want to sit here and learn this thing called trading? What is that thing that's going to make you want to change from what you believed about money that you thought was true, that right now in your realization that is not true, that you want to start changing? I want you to start to rebuild your self-image and know that it does not take hard work or a long time to make money because you have this instrument called trading. Trading and time has no bearings on one another. Trading, time, and income has no bearings on one another. You know right now that you can get in a trade and make $5,000, $10,000, $1 million. On the flip side, you can lose $5,000, $10,000, or $1 million if you have no discipline nor no rules. Learn to love to take a loss, guys. Meaning this here, as soon as you realize that the trade is not working out as you anticipated to work out, you're going to take that and cut that trade without a doubt, without even thinking, without even blinking, without a hesitation, because your job is to take income out of the market, or earnings out of the market, or profit out of the market, and not put money into the market. So you're going to learn to take a loss. That means that soon as you realize that trade is not working in your favor, you're going to cut the trade. That's what that means. That means you're going to get out of the trade. You're not going to sit there and say, oh, it's going to come back 20, 30, 40, 50 points. I'm down $2,000, $3,000, and I'm still sitting there blind to what the market is actually presenting to me, and I take the trade. Some people say, well, I wouldn't do that, Kelvin, because I don't want to pay all their commissions. I'd rather pay them people $4.50 commission than pay them $450 of my hard-earned cash. Now, you heard that. Hard-earned. That's old programming. Easily earned. Intelligently earned. I don't have to work hard to make cash, but I'm still programmed by what my parents told me, what my teachers told me, what my professors told me. I'm still programmed about this hard work and money. It has no relevance on one another. Time has no relevance on one another. So I want you to be really ready to say, I will cut a loss as soon as I notice that it's not working in my favor. Now, it does not have to do with your trading strategy. It's totally separate, okay? Because when you take a trade and your strategy says, I'm going to risk $500 or 10 points, you accepted that risk before you push the button. That is acceptable. I'm saying that when it doesn't work out, you grab your stop, you start backing it up, and you start backing it up, and now you, instead of $500 you was willing to risk, now you're risking $2,000 because you're thinking it's going to do what you said. That's your ego playing tricks on you. You have what we call trader paralysis. You sit there, you start doing things contrary to your plan or your strategy. Oh, in fact, you might not have a plan. You may not have a strategy. You may not have rules, and you're breaking your rules, and therefore you're setting yourself up for a disaster. I want you to know that your rules are there to protect you. You have to be disciplined as a trader. You have to continue doing the things that's necessary to bring you into the future that you want to see. That vision board is going to be your key. You put that vision board right behind your trading computer and you look up at it every day. You dream about the life that you're going to have because of your discipline, because of your money management skills, and because of you following your rules, because you're journeying your trades, and you reinforce the positive behavior every day. And you don't say, oh, I wish I had stayed longer. That's negative feedback loop you put in your subconscious mind to say, stay in the trade, don't take gain out of the market, and the market come back and take all the gain back from you because you didn't follow your rules. If you set a profit target, don't you move your profit target. Take the gain at your target. If you said, if it's not working, it's too close, then readjust your strategy, but keep doing the same thing over and over again. Remember, guys, how do you eat an elephant? One bite at a time. one bite at a time. You don't eat an elephant all at one bite at a time. Remember, in your trading, remain flexible, because flexibility means that my rules are to protect me, but even with my rules in place, if I fail to believe that the market is not doing what it should be doing at a certain key level that I'm looking for, or I'm entering a trade, I have to remain flexible, meaning that I'll be willing to change my strategy, change my approach, change the time I'm trading, until I get it perfected where I'm running at a 50% win ratio minimum. 50% win ratio minimum. And if I'm not running 50% win ratio, I need to go back and revise my strategy. I need to do some practicing on simulated trading until I get to the place. Hear this out. Don't practice with your real money. Don't practice if you're doing a proper account with your account. Practice with the flexible trading in the simulation market. Trade for 2 or 3 days or 5 days on simulation until you get your win ratio to 50%. Then you start pushing the button on other things. Now, if you're coaching with me, which most people here are, you already know how to do that. You shouldn't have 5 days that you're not making money. You should be able to trade right now today with the rules in place that we've already given you, that you've already been working on, but you're not living by them. Understand this fact, guys. You deserve to make the money. Okay? You're not greedy. You're going to take your portion out the money, out the market, because you know one thing, the market is always going to be there. It's always going to do the things that it does. Okay? It's always going to do the things that it does. Okay? We got the next one we're going to be is your trading rules. This is where we're going to spend our time at. Your trading rules is the most important thing to your trading. Before you ever get ready to pull the trigger, before you ever get ready to get into market, you must have your rules written down. You must review your rules before you start trading. Midday before the second session, you read your rules again. What are you doing? You're reinforcing this into your mindset that you're going to do these things and you're going to hold yourself accountable that you're going to do them. Most of us here, and I'm not going to call no names out, I'm not going to challenge you personally, but ask yourself, answer this to yourself. Do you read your trading rules before you start trading each day? Do you read your trading rules before you start your second session? Be honest with yourself. And if the answer is no, then you're setting yourself up for failure. Why do you read the rules? To reinforce your strategy, to reinforce your guidelines. Because if you read them enough, they'll become your new reality. If you listen to the videos enough to talk about mindset, it become part of your reality. Because remember, you have 18, 20, 30, 40, 50, 60 years of training by inconsistent data that's not in consistency with your winning desire in trading. So your trading rules is to help you reprogram your subconscious mind, because your trades are won and lost in the subconscious. Won and lost in the subconscious. So here's trading rules. Write this down. Okay? Always use a stop order. Never put on a trade without a stop order. After 3 losing trades in one day, stop trading. One more time. After 3 losing trades in one day, stop trading. Now, my thing is 3 consistent losses. If I lost and I lost and I lost, what that really means to you guys is this here. It means that you're taking a trade that's not in your best interest. You're trying to enter trade at the wrong time frame, or you're taking trades without the proper stops in place. So that means that you have to go back to the drawing board and find out why you losing 3 trades in a row, and then make the adjustments in your strategy that will prevent you from losing 3 trades in a row. Now, here's this out, guys. You're going to lose on trades. And we got guidelines for that, so we talk about it through the coaching, okay? Have a desire. If you get into a trade and you get up 10, 15, 20 points in the trade, move your stop or loss to break even. Okay? Now, mine is 15 points. If I get 15 points into the trade, I move my stop loss to break even plus 1 point. So that means that if the trade continues to work out, great, I'm going to make money. If it doesn't work out, the worst going to happen, I'm going to get out the trade with 1 point. I always move my stop 1 point into the future. That means above my entry once I hit 15 points. I'm trading NQ, NASDAQ now. It moves very rapidly. It moves 15 to 20 points on pullbacks. So take that in account. If you're coaching with me, we're going to work on that today. Okay? So always move your stop to break even. That takes the pressure off of you. Okay? Make sure that you only use signals to get into the market. What is a signal? When you're working with me, you trade in reversals. If you're working with me, they're time related. If you work with me, you only take trades at the top and bottom of the hour. Do not just take a shot. Oh, I'm look like it. I feel like it. Your feelings will wreck your trading all the time. Okay? Get your feelings out of the market. I want you to be emotionlessly trading, meaning that your emotions have nothing to do with it. It's strictly edges. When it meets my edge, time, level, price. What's the time? Where's the level? Is the price in the level? Yeah, take the trade. No, it's not. Walk away. That's a cliche I made, and I think it's very helpful to your trading and to keep you disciplined from not trading all day. Okay. Next, do not trade on holiday type volume. Now, holiday type volume, that happens in the market. Yesterday was a perfect example. Man, you looked at the VWAP, it was flat straight across. You see that? Run, Will Robinson, run. Get out of the market. That is not in your best interest. It will wreck your account. It will mess up your psyche, and it'll mess up your trading for the next day. So never trade in holiday type market. When there's low volume, there's too many bad opportunities that the market will move flimsily forward and backwards for no reason at all, because it's not driven by volume. It's driven by manipulation, and it will wreck your account. So low volume, don't trade. Close the computer. Walk away. Always act with your own best interest in mind. If the trade is performing, let it go. If the trade is not performing, cut the trade. You understand me, right? The market will do what the market's going to do. It has no bearings on you. You have no control of it. Always act in your own best interest. Okay? Consistently trade on the long side. Okay? What that means that if the market is bullish, I'm only going to take longs. How do you know a bullish market? Well, the way we gauge the bullish market, we use it by the 50 moving average on the 30-minute candle. If it's above the 50 on the 30, we bullish. If it's below the 50 on the 30, we bearish. Now, there's other indications that you use, but let's say time frame. If I'm working in a 1 hour time frame, and that's the area I watch, because I use the 30-minute, 1 hour, 4 hour as my gauge for my trading. And I use it daily. So if the daily candle is at the 50% mark or above of that daily trade volume from yesterday, I perceive that market to be in a bullish standpoint, higher time frame. Okay, if the candle of the previous day is up at the 50% below that mark, I perceive it to be a bearish trend going on. So we'll talk about that constraints later on. But this is how you know how you're going to be short or long, going long on the market. In a downward trending market, avoid going long. You may miss a play, 15, 20, 30 points. Just miss it. It's okay. Because when you start to mix up your strategies, I'm in a bearish trend and now I'm going long, and I'm going short, I'm going long, you mess up your consistency, you mess up your mind for making decisions, and now you're second guessing every trade that you take, and you miss the trade that's going to make the money. The trade that's going to make the money is the one that's going with the trend. So your desire to make money is very much tied to your discipline of restraining from the market until the market lines up with your perspective or your bias for that day, or your probability that the market will move in your way. Okay. Next one is this here. Always look for the key areas to get in the trade. Double top, double bottoms. Okay. Breaking reversals, breaking certain trends. These are your edges. Breaking VWAP, whatever your edge is. Look for it, and then look to the lower time frame. Hear me out. Look to the lower time frame to execute your entry. Because if you're using 30-minute, 1 hour candles, you can't see the small part. You see the big picture, but I use the 2-minute candle to help me get in the trade. Or the 1-minute candle. I see the key areas where it's bouncing at, and when it moves in my favor with 3 consecutive bars in the right direction, that tells me continuity of movement. When I push the button, the trade pulls me in favor of my trade versus going in reverse of my trade. Many times we as traders, especially novice traders, we'll push the button. As soon as we push the button, we're down 10 points. We kind of figure out what happened. You pushed the button at the wrong time. You're not monitoring the lower time frame. The next thing I'll say is relax in your trades. It's number 9. Relax in your trades. Meaning that don't be sitting there stressed out, sweating bullets, palm sweating, and you took the trade. If your trade is not enjoyable, it's not worth doing. I want you to have fun when you're trading. I want you to trade with an expectation that I come to take mine. I know in that market, the money is there for me. I know there's people in that market that's ready to give me some money. So I go with the enjoyment of taking a trade. I get excited when I'm in a successful trade, and I'm even excited when I get out of the trade because I know I kept my disciplines in place. So you have to be enjoying your trading to be successful. If you're not enjoying your trading, chances are you will not be successful. Understand this fact here. Number 10, you do not have to trade every day. Sometimes, like yesterday was one of the days you just close the computer, walk away, don't trade. But if you find yourself having the need to trade every day, you got to go back and check your desires of why you're trading. Remember, all you need is 1 or 2 good trades a week to double or triple your income that you're currently making on your hard-working job that has no relevance on your trading. So know the fact, accept the fact you do not have to trade every day. It's okay to say I didn't trade today if the market wasn't looking like it was producing the kind of movement that I wanted, or whatever that gauge may be willing to step out of it. And the last one be waiting to trade when the time frames line up. We talk about time frame continuity. When you're trading in a market that's short, going short or trending down, the daily, the 4 hour, the 1 hour, the 2 hour, the 1 hour, the 30 minute, the 15 minute, are they lining up in the direction of your trade? The best trades you can take when the time frames are in alignment. If you are in a trade where it has the 1 hour is trending down, the 30 minutes trending down, and then the 15 minutes trending up, now it's not time to pull the trigger. Wait till the 15 minutes start trending down. Now you're looking for the continuity that's in place. That's the lowest time frame I use. Now we'll use 5-minute candles to enter with because they're the lower time frame for execution, but not to make a decision on. My decisions are made around a 30-minute candle. When that 30-minute candle and that 1 hour candle, that 2 hour candle, that 4 hour candle, that daily candle is lined up, oh man, hot dog, I'm taking a trade. That should be your perspective. So if you do these things here, guys, then we're going to bring patience in. Only going to trade the top, bottom of the hour. I'm going to trade the open. I'm going to trade the second half of the day, 1, 2, 3 o'clock, or West Coast, 10, 11, 12 o'clock. Only going to trade if the time, level, and price lines up. Follow these instructions, guys. I truly believe it's going to make a difference in your trading. This is one of the reasons why I put this together, and I want you guys to know that the trading strategy that I want you guys to realize is this here. Make sure that you're doing the 20-day challenge to give yourself a new rule, a new habit, okay? If you didn't get the 20-day challenge, I want you to get it right here. 20 days, set your goal, whatever it be, $250, $500, and hear this out. You might can make $5,000, but it's not about the money. It's about reprogramming your mind for the discipline. It's not about you getting and qualifying an account. It's out for you to get rid of the stinking thinking, to get rid of the things that's been holding you back, get rid of the things that's been causing you grief, to lose sleep at night. So I want you to set a realistic goal, and I want it to be fun. I want it to be enjoyable. I want it to be something that you can hit every day, whether it's $250 or $500. I want you to do it for 20 days straight. 20 days straight. It takes 21 days to get a new habit. So it takes 21 days to reprogram your mind. Now hear me out. You may sit back and say, oh, wow, I'm missing money. That's the stinking thinking you got to get rid of. What you're doing, you're setting a rule in place that you're going to follow, and your mind and your body going to line and say, man, I love following my rules because they work. I'm green every day. Now you are putting yourself in a position to become a profitable trader. That's all I have for you guys today. Make sure you understand. Oh, and another thing, I want to give you this one last thing here. I'm going to show this to you until you get it. If you haven't taken a screenshot, take a screenshot here. This is the trading hierarchy of acting in your own best interest. Let me make this bigger. I'm going to read this here for you guys. And I didn't read it last time, but I want to read it for you this time. Okay. What novice traders do, a newbie, they think technical analysis is the best thing for them. They think they practice the price action trading, technical indicators, structures analysis, trend analysis. Them things are important, but they're not the most important thing. They seem important, but they're not the most important thing. But Kelvin, if I don't do these things, how am I going to know? They're important, but they're not the most important thing. They don't always act in your own best interest. You don't just pull the trigger when it's there. See, a professional trader look at risk management better than they look at technical analysis. So they protect the capital. What your job is, risk management, trade management, taking gains out of the market, risk assessment. Am I getting a 2-to-1 risk to reward? If it's not there, I don't take the trade. What does that mean? I take a trade at this level here, and I'm trying to get a $500 profit in, but I see a resistance point at 250. I avoid that trade. I do not take the trade. I pass it up until I see where the market is available to give me at least the $500 or $5,000, whatever that target is, in position where there's no opposition in front of me so close that it will stop me before I get to my target. So you notice I trade today. We took a trade this morning, and I say I'm going to stay at the target, and the trade it all went to target. There was no opposition for it to get there. There were pullbacks and so forth, but with the right risk management, I was able to stay in the trade and make it to target. That's key for you guys. All right, stop placement is so key, guys. Some of us say, well, I only want to risk $5. I want to risk $10, but the market requires $25, and you won't put your stop in the right place. Remember, your stop is never meant to get hit. Your stop is there just in case all hell breaks loose and things go terribly wrong. But your stop is there it's just like insurance, just in case something happens. It's never meant to be hit. If your stop getting hit often, then you probably have poor stop management. I want you to understand that stop placement, very important. But here is the professional traders. This is what they do. Patience, emotions are under check, and psychology. They have got their mind straight. And this is the 20 days going to help you with your psychology, your emotions, and your patience, because your rules going to be becoming dominant in your trading. Your taking profit is going to be dominant in your trading. Even though the market was giving you more, you only took the portion that you desired to take, and you were satisfied with it. You say, I don't wish and never say, oh, I wish I stayed longer. I wish I put 10 more on. You're setting up negative thinking in your head. And next time it gets time to take profit out, you're going to move your stop and say, well, I'm going to wait till they give me 25 more points. That is dangerous to you. Discipline, waiting for the best trading setup. Only trade your edge. No emotional, no formal trading. No revenge trading. You lost the money, guess what? It's gone. Can't get it back. Trade tomorrow. The market always gives you endless opportunities. Okay? And cold mindset. That means that I'm like a machine. No emotions at all. I'm like a robot. Boom, in. Boom, out. Target, hit. No emotions. I ain't smiling. I ain't laughing. I'm just acting on it, guys. That's when you're confident. That's when you've got your rules in place. That's when you got your disciplines in place. You know when to get in and when to get out. Hear this out. Correct expectations. Not what you want, but what the market's willing to give. You can see an area of resistance. Put your stop right before that. Take the gains. That's expectations. But don't think it's going to break through the resistance and get to another level that you wanted to go to. That's not correct expectations. Take this down, guys. You're a professional trader. I am your coach. I am Coach Kelvin. I'm here to help you get better, to grow stronger, and do the things that it takes to be a successful trader. If you want to know about coaching or anything of that nature, go to dominantcoaching.com. All information is there. I'm here to help you be successful. I'm Elliot Kelvin. That's my Discord handle. God bless you guys. Peace. And I'm out of here.